If you're having a hard time making sense of what's going on in the stock market these days, you're not alone. In fact, even some of the professionals are finding themselves behind the curve as the financial world has embraced futuristic developments like digital currencies and electric self-driving car manufacturers. To keep up, seasoned investors are developing tools to help them navigate this new wave. Luckily, their fancy financial gadget can also be part of your investing toolkit, right there alongside your newly downloaded investing apps. So, what are these new tools? The advent of the apps like Robinhood has revolutionized trading, and as we saw in the Reddit GameStop fiasco, the new generation of investors are motivated in its embrace of the tired old video game retailer by a strange combination of sentimentality, nostalgia, and sometimes straight-up antagonism. As the Wall Street Bets community and other retail traders feel buying spree of the trend meme stocks, Wall Street itself is wondering how to get its head around the strange combination of motivating psychological factors so that it can cash in on the next GameStop. How interesting it is! In the past, being a retail trader has been mostly being fooled, hoping to best the market by lacking of the infrastructure, assets, and the information that professionals enjoy. Most professional fund managers that regular folks can invest in fail to beat the market. That's one reason why index funds and other passive investments that merely track aggregated performance have grown so much in recent years. Why pay more to have someone make you less money than simply making the same return as the S&P 500? However, things have entirely changed in recent years. Robinhood blew off the trading fee economy, and now, along with a host of the similar companies, Public.com with the social focus, Free Trade in the UK, and so forth, has made retail investing far more accessible than it was before to the more folks. And we're trapped inside. And the Reddit forum has gone from the in-nerd joke to the front page news after the users started to push their weight around. What has entirely changed is that the combination of mature social platform and free trading has at once boosted access to the public market, where Reddit and other online congregation points have provided a simpler way for the retail investors. We now call it as a Reddit rebellion. How cool is that? Starting from MemeStock, Buzz Index, GameStop, Reddit, Robinhood, and there are really a lot of story to share. No more words are needed. Let's follow up. As the effect of the social media sentiment on the stock market grows, the meme stock has flourished. 2020's stock market was interesting, to say the least. We saw the record highs, the world's economy getting rocked, and the election like no other. 2021 doesn't seem interested in normalizing thought, because after the world's most valuable company, Apple, posted record revenue and blew out quarter a few weeks ago, two previous beleaguered stocks, AMC and GameStop, dominated the headlines. They, as well as many others, have been growing at breakneck speed and gaining themselves the name of meme stock following the ongoing short squeeze. So, what is the meme stock? In other words, Buzz Index. As social media has grown in importance in modern life, the ubiquitousness of the meme has grown with it. So much so, it has even pervaded in the stock market. Meme stocks have become buzzword in certain investing circles over recent years, and the accompanying hype has resulted in a significant shift in the valuations. Just look at the power that Reddit and Twitter have had over the market in recent days. A meme stock isn't as easily defined as a growth or value stock, so to give it a definitive categorization would be inappropriate, nor are actually categorizing it alongside growth and value stock. They won't be found in textbook anytime soon, but to overlook their impact could potentially be expensive oversight. Some of the common characteristics that meme stocks share are they're usually overpriced and experience spike of the rapid growth in short space of time. Popular amongst millennials, they are prone to high volatility with valuation based around potential rather than financials, or in a GameStop case, not potential at all but simply taking advantage of the system. Usually, the sentiment around the stock is positioned around the future problem it solves, with the talk of valuation very low down the list and usually only proposed by bears. FOMO, which is the abbreviation of fear of missing out, is a big motivator to the buy, while panic selling at the slightest headwind is common, adding to the stock's volatility. So here comes the question, how did they start? There are two main contributing factors that lead to the birth of the meme stock: commission-free trading and online investing communities. Initiated by the companies like Robinhood, before being undertaken by some of the most established names like Charlie Schwab and TD Ameritrade, commission-free trading has opened up the stock market to the wider public and facilitated trading at any level. Online investing communities found on the social media site Reddit and StockTrade are also the big factor in the birth of meme stock. StockTrade, a social media site much like a version of Twitter dedicated solely to the stock, has millions of users, while subreddit r/stock and r/investing both are growing daily. These numbers, along with the 6.3 million self-proclaimed degenerate which make up the now infamous Wall Street Behemoths subreddit, hold some significant clout in molding market sentiment. GameStop calls to the moon is the current call to arm pervading the online community. The Reddit rebellion might have died for a moment, but New York asset manager Van Ack is betting that there is long-term value in listening to social media chat and is launching a social sentiment exchange-traded fund. The fund will invest in a stock being most chalked up on a social media site with a Buzz Next Generation AI US Sentiment Leader Index to serve as the underlying index. Jamie Weiss, a Toronto-based hedge fund manager and a chief executive of the Paris Gulf Capital, which created the underlying index, is more optimistic about the reboot. There is much more acceptance of the idea that there is broad investment community out there, and they do the interesting things to say. Wall Street this year has swung its attention to retail investors engaged on the Wall Street Bets page of the online community Reddit after they fueled a buying spree of the heavily shorted stock. A rally in GameStop share notably forced hedge fund Melvin Capital close out their short position on a video game retailer after suffering hefty losses. The Buzz Index, which Van Ack has decided to license, aggregate contents related to the investment from Twitter, StockTrade, and other sites, as well as blogs and news articles. The contents is then analyzed through the machine learning and artificial intelligence in an effort to identify patterns, trends, and changing sentiment which can affect market-based outcomes. The portfolio, which is rebalanced monthly, is then formed by the 75 US large-cap stocks determined as to having the highest degree of the positive investor sentiment and the bullish perception. Van Ack's ETF could drive off the Virgin Galactic, the commercial spaceflight developer overseen by the billionaire Richard Branson, as its largest continuant of the Buzz Index. Financial Times also noted that the Van Ack's Vector Social Sentiment ETF is a revival of the Sprott Buzz Social Media Insight ETF, which ended in March 2019 after running for more than 3 years. During the Sprott ETF incarnation, the Buzz Index outperformed the S&P 500 by about 10% points. However, since the April last year, it has taken off, surged by the 130%, well ahead of the 55% gain of the broader index. Weiss attributed this in part to the broadening of the online conversation, with the number of the posts available for analyzing rising from about the 2 million a month originally to the 50 million. We think the biggest thing that has led to the outperformance is how the conversation online has grown and evolved. The more people online, the more people engage in talking about stocks, the more confidence and breadth in security selection of the fund, he said. Nevertheless, he warned of the potential of the high turnover, given that the online crowd moves quickly and hot money moving in is often the hot money moving out. Typical monthly turnover is in the mid to upper teens of the 75 stocks, with sentiment being measured over weeks or months to avoid the portfolio being driven by the short-term trends. For this reason, Reddit is not a big driver of the Buzz Index. And here's the final words. The social medium is the message. While there is a strategy related to fundamentals and technological analysis, or the combination of both mindsets, this particular approach emphasized the strength of the social media. If anything was gleaned from the recent Reddit news, is that the retail investors do have the voice. So now the retail investors, the Robinhoods, are leading the market. Thank you so much for watching my video, and please subscribe to my channel and show your thumbs up. and I will hop around the world and bring lots of thousands of funny stories to you. Let's hop around together. Thank you, and see you again!